Hey, what's up, my friends? So welcome back to this month's price action analysis. It's already December and it will be the final price action analysis for the year. Duh, it's the last month of the year. So to kick things off, I want to share with you, first one is Euro Canadian. It's a trade that I took. So let me kind of break it down to you step by step, why I took this trade, entry, stops, exits, and stuff like that. And for those of you who are new to this, so the monthly price action analysis video, we pretty much covers my trading from a discretionary trading standpoint, my thought process, and I share with you a few trading opportunities, usually trending market opportunities, in the coming days or weeks. So quick one is Euro Canadian. You can see that overall this market is in a downtrend. Price has recently broke below this area of support. Okay, broke below it, and it came back, retest this, not quite this area, but this swing high over here. So why is this significant, So going down, to the 8-hour time frame, let me just illustrate to you, So at this point, okay, you can see that the market on this time frame retested this area of resistance. Okay, so it was the swing high that I marked earlier on the daily time frame. So notice the price came up into it once, got rejected, or rather just made a pullback into this previous resistance, which became support, and then staged another rally, taking out this highs and then taking out this highs over here. So at this point, to be honest, at this point, I am not looking to short this market because the price is making a series of higher highs and higher lows. Why would I want to be shorting against this bullish momentum? So I'm looking for signs of crack in this market, signs that the sellers are coming in, stepping in, and about to push the price lower. Only then, will I look to enter a trade. So another thing to point out is that at this high, at the point where I was taking a trade, this high, I believe, was the previous week high. So Euro Canadian at this point, not now, but at this point when I'm taking a trade, this is the previous week high. Now, why is this significant? It's because Euro Canadian, is one of those currency pairs that whenever it retests the previous week's highs or low, it has a tendency to reverse from there. So for example, if it retests the previous week high, there's a good chance it could reverse lower from there based on statistical data, based on backtesting. And of course, I don't just blindly short when Euro Canadian reaches the previous week high. I look for multiple confluence factor, I look at the price action, we look at the statistics, we look at patterns, before we time our entry. So let's look at the story so far. Euro Canadian, so far it's in a downtrend. Then it came towards this area of value, which is an area of resistance. Let's call it area of value first. Then we know that Euro Canadian is one of those currency pairs where it has a tendency to reverse at the previous week high or low. So in this case, it retested the previous week high. Let's call it a weekly high, previous week high. Okay, and so the next thing I'm looking for is an entry trigger. So this came in the form of a very simple basic candlestick patterns, in this case over here. So we have two bearish candles, the first one over here, but this one here I'm not convinced, because you can see that there's a long lower wick below, signaling buyers stepping in, pushing the price higher. But this kind of sealed the deal for me when the price closed lower near the lows of this candle. So I went short. I had a sell limit order somewhere about here, pretty much got filled, as you can see over here, got filled because the market went against me. And my stop loss, is somewhere about here, 1 ATR above the highs. So as of right now, the price, it's kind of against me slightly in the rate for this currency pair. But hey, still sharing, This is part and parcel of trading. Sometimes you win, sometimes you lose, But the key thing here is to understand the thought process to, why, I'm looking to enter the trade. And one thing to add is how am I going to manage this trade is that as of right now, I have marked two orange lines for this current week. This is the previous week high. This is the previous week low. So since I know that this currency pair has a tendency to reverse at the previous week high or low, I'm looking to see how it reacts at this level over here, this previous week low. If it comes into that level and then there's a bullish price rejection, like a hammer and engulfing pattern, I'll manually exit the trade. But if it just collapses down lower, and slides through that level easily like a hot knife through butter, I'm looking to take my profit at this area of support over here, So that's kind of the game plan, if the market moves in my favor. But what if the market, moves against me? Well, bam, I get stopped out and move on to the next trade. That's it, So simple, pretty straightforward stuff. So another thing to share with this dollar against the Sing. So this is a trade that I missed, but again, the thought process, I would say it's worth sharing, because it's the same concepts that I've been sharing over and over again. So if you look at the dollar, US dollar against Singapore dollar, you can see that overall this market is in an uptrend. Then it came towards this area of value at previous resistance, which could become support. So on the 8-hour time frame, or even a daily time frame actually, but we'll just use the 8-hour time frame, Notice, right, how the price reacted at that level and gave you a valid entry trigger to go long in the form of a bullish engulfing pattern. So I missed this trade, but you can see, right, this concept, right, it can be applied to other currency pairs as well. So again, if I had seen this one, what I'll do is I'm usually a cheapskate. I like to place a buy limit order a few pips below the closing price, stops 1 ATR below the low, possible target again just before this swing high. So just sharing with you a trade that I missed right now this week. So moving on, let me share with you some other trading opportunities that I'm looking at for this coming month. So as mentioned, I like to trade a trend. So many of these trading opportunities, they're all trending markets. So first one, Euro against Swiss franc. This is daily time frame. What is the trend? Down, right? So you can see that the strong bearish momentum towards the downside, right? In this case, if you are trading on a daily time frame, it can be difficult to time your entry because you can't really analyze the pullback, right? Before you can even analyze the pullback, the market just continues to slide down lower. So this is where it's useful, right? If you go down to a lower time frame to time your entry, in this case, the 4-hour time frame. So in this case, you can see that. Let me just overlay with the 50 MA. Notice how this currency pair and on this time frame bounce off the 50 MA once, twice, three, a number of times. So the next possible, or rather the area of value I'm looking at is over here, around the 1045 level, to see if the market can make a pullback into this area of value, this area of resistance, right? Have the confluence of the 50 period moving average and then make a bearish reversal, could be in the form of a shooting star, a bearish engulfing pattern, etc. Then I'm looking to short on next candle open. Stops can go 1 ATR above the highs. Possible target just before this swing low. For those of you who wants to ride the trend, you can use a trailing stop loss to ride the move down lower. Okay, so this is a Euro against the Swiss franc. Another potential trading setup is dollar against the Chinese yuan. So this one again, you can see that overall this market is towards the downside. In fact, you just zoom out, right? You can see this market is in a downtrend. It's in a long-term downtrend. And recently, right, I'm seeing weakness because I see a series of lower highs, lower highs, lower highs, lower highs coming into this area of support. And that to me is a sign of weakness. This tells me that the buyers, they have difficulty pushing the price higher, because if the buying pressure is strong, right, they should be able, right, to, you know, break out of this previous high, or when they attempt to push up high, you should be at least break out above this high. It couldn't. Each time the rally occurs, right, it gets weaker and weaker. This to me is a sign of weakness, and I'm looking to trade, right, the breakdown on this market. So again, how do you trade this? Very simple stuff, right? When you trade breakouts, key thing I'm looking for is volatility contraction. I'm looking for volatility to decrease. This is a concept that I've learned, right, from numerous traders. For example, one of them is Mark Minervini. He talks about the volatility contraction pattern in stocks. So in this case, I'm applying it to the forex market, and I'm seeing volatility contraction over here. Range of the candles are getting smaller and smaller. So the entry trigger is very simple. I'm just looking for a break and close below this area of support. Okay, when that happens, I'm looking to go short on the next candle open. And then I'm just going to trail my stop loss, right, if the market moves lower in my favor. Initial stop loss will go 1 ATR above this high, somewhere about here. So we'll see, right, if the breakdown occurs. If it continues to move in my favor, I'll just, you know, trail my stop loss, right, and ride the trend down lower. If it reverses against me, bam, I'm out of here. Just hit my stops and I'll exit the trade. Okay, so moving on, right, let's have a look at the stock market. So a quick overview of the US stock markets. You can see that overall, it's still bullish. It's still in an uptrend. How do I know that? Because that's what the chart says, right? Just a little bit of context. If you just look back on the S&P 500 over the last 12 months or so, price heads up higher, pulls back, heads up higher, pulls back, heads up higher, pulls back, higher, pull back, higher, pull back, higher, pull back, higher, pull back. Then, you know, this one over here, pull back, higher. Right now we are making a pullback. So I wouldn't be overly concerned. I would be concerned, right, if the market were to break and close below this key level, right? So that's telling me that, you know, medium term, right, there's some bearishness in the stock market. If we can break and close below 4,300, right, I would say, you know, there'll be some medium term, right, I'll be, you know, more towards bearish on the stock market. But as of right now, if that level holds, right, I'm still a short term, medium term, and long term bullish on this stock market. So as of right now, stock market is making a pullback. Pullback is nothing significant, because if you look at the depth of the pullback, it's pretty much within the realms of expectations, right, over the last few months, right? The depth of this pullback, the depth of this pullback, the depth of this pullback, the depth of this pullback. Right now, we're making a pullback of about 200 points, thereabout. So nothing too frightening. So looking for buying opportunities in the stock market. So there's a lot of stocks to choose from. So one thing to share with you is this one over here, ZWS. This is the one I'm looking at right now. So you can see that this stock overall, it's in an uptrend, series of higher highs and higher lows. I overlay with the 50 MA. You can see the price respecting this 50 MA as well. Tested once, twice, 3, 4, 5, and we are back here once again 5 times, thereabout. And if I zoom in a little bit, right, this is also having the confluence of this area of support. Okay, then we have actually a false break. All right, notice that on Thursday, price closed higher back above this area of support. Friday, we have a slightly down day. So overall, right, if this level holds, right, I expect this stock to retest back this highs over here. So I would say this could be a potential buying opportunity to go long on this stock in the short term, right? Your stop loss again can go 1 ATR below this lows, right? Let's say you buy on this around this entry point, right, where the price closed on Friday. So from the entry to this highs, right, there's about potential 1-to-1 risk reward ratio on this trade. So this will be the size of your stop loss, and this will be a potential target for those of you looking to capture a swing. So this is one potential stock trading opportunity to share with you as well. And by the way, if you enjoyed such market analysis, me dissecting, identifying the best trending markets in the forex, commodities, or the stock markets, then you might want to check out Pro Traders Age. This is a weekly weekly report, right, where I share with you the best trending markets that I'm looking at each week. So you get my ideas, right, in a video format for about 10 minutes, 12-15 minutes each week, right? You get this report where I break down to you, just like in this video, the markets I'm trading, where I'm looking to enter, exits, and which are the best trending markets right now. So of course, I go much deeper. I give more trading setups in the forex and stock commodities. So again, if you're interested to get or be part of this Pro Traders Age membership, you can just go down to tradingwithrayner.com/PTE. I put the link somewhere below this video. You can check it out, right, if it's a good fit for you. So with that said, I wish you good luck, good trading. I will talk to you soon.